Welcome to the Deep Dive, your shortcut to understanding the most vital, buzzing topics. And right now, few things are generating as much strategic interest and, frankly, market buzz as copper. We're seeing COMEX prices, hitting all time highs. And this metal is just increasingly indispensable to our electric future. Today, our mission is really to cut through the noise. We want to pull the most important insights from Freeport McMoRan's, that's FCX, the recent Q2 2025 earnings call, and the reports that go with it. We're going to unpack what their performance, their strategic moves, what their market observations reveal about the future of this critical metal, and crucially, how these shifts might affect you. We're drawing straight from their latest financial release and the detailed discussions from that Q2 earnings call. So yeah, get ready. Let's connect the dots between global economics, technology, and what's happening on the ground with a major player.
Okay, so the copper prices, they're certainly showing an incredible surge right now. We've seen COMEX hit those all-time highs, LME prices staying really robust. From your perspective, what's the fundamental driver here?
What's behind this surge, and maybe how sustainable is that momentum?
That's a great question, and it really comes down to something pretty simple, almost deceptively simple. Electricity means copper. That's the core of it. As the world electrifies, as it decarbonizes, the demand for copper just intensifies dramatically.
Right.
Think about it. An electric vehicle uses, what, 4 times as much copper as a conventional car?
4 times, yeah.
And building out renewable energy grids, expanding global power infrastructure, the needs for AI data centers, even modern defense systems, they all demand exponential amounts of this metal. So it isn't just about more electricity. It's a fundamental rewiring of our whole global economy.
Right.
And it relies on copper as its very backbone. The challenge is that demand is projected to keep outpacing the available supplies. And that creates a significant bottleneck for the industry.
And it's not just the industry feeling this, right? Governments everywhere, globally, are intensely focused on securing critical minerals. And copper's really leading that charge. It really makes you think, how do these big macro trends directly impact your daily life? From the phone in your hand to the energy powering your home, copper's there, kind of silently shaping the industries that define our future.
So who's positioned at the front of this accelerating copper boom? That would be Freeport McMoRan, FCX. Their tagline is foremost in copper, and it seems to really define their global strategy. Can you maybe elaborate on that? What does that mean, their strategic positioning?
Absolutely. FCX they've indeed positioned themselves with remarkable geographical diversity. Roughly a third of their copper production is in the U.S., another third in Indonesia, and the final third. That's spread across Peru and Chile.
Okay.
And this isn't just about having a global footprint. They are the dominant producer here in the U.S. They account for over 70% of the country's refined copper.
Wow, 70%. Yeah. And what's particularly noteworthy is their commitment to being a fully integrated producer globally that involves substantial organic growth projects and managing the entire value chain, from the mine right to the market.
And it's clear they're backing this strategy with a pretty robust financial policy, too. Their approach seems centered on maintaining a strong balance sheet, returning 50% of their excess cash flow to shareholders' dividends, share buybacks, and then investing the rest back into these value-enhancing growth projects. It really underscores a long-term vision.
Yeah, exactly. Understanding FCX is pretty much understanding a huge chunk of the global copper supply chain, especially when you think about all this talk around critical mineral security. Their position as a major integrated producer, it's hugely important for how global supply and demand dynamics play out.
Okay, let's shift focus. Let's turn to Indonesia. A particularly interesting development there is the startup of FCX's new copper smelter. It actually began operations a month ahead of schedule back in May 2025, and they're expecting the first copper cathodes by the end of July 2025.
Yeah.
So how strategically important is this new smelter for their global operations and maybe for the broader market?
Oh, that's a critical turning point for FCX. Really critical. This smelter, it isn't just a win for the company, it's kind of a strategic chess piece in the global game of critical minerals. It's crucial for FCX to solidify their position as that fully integrated producer globally. And like you said, it's vital for extending their operating rights there in Indonesia beyond 2041.
Right.
Their Grasberg operations, that's truly their cornerstone asset, not just because it's the world's second largest copper mine, but because, get this, it actually provides a net credit for operating costs. About $1 per pound of copper.
Oh, credit.
Because of its valuable byproducts, like gold. So by localizing the processing with this smelter, Indonesia is signaling, a stronger grip on its resources. And that could potentially influence future trade dynamics, maybe set a precedent for resource nationalism elsewhere.
That makes a lot of sense. But within that Grasberg story, there's this nuanced detail, a revised near-term outlook for gold production. They mentioned about a 15% reduction in expected 2025 gold output. What's behind that adjustment, and what does it mean for the ultimate recovery of the gold?
Yeah, good point. This specific adjustment, it comes from a recalibration of their draw point flow model in the Grasberg block cave. Essentially, this model dictates how they plan the sequence, the extraction of ore from this massive underground mine. Think of it like adjusting the specific taps they open to manage the flow of material, and that impacts when certain grades come out. But it's really critical to understand this is a timing-related adjustment. It's not a loss of the resource itself.
So the gold's still there.
Exactly. It's not expected to impact the ultimate recoveries over the life of the deposit or even the overall 5-year aggregate production. The gold is still there. It's just a matter of when it gets recovered in the sequence.
Got it. And with the new smelter coming online, they're also shifting how they recognize sales, right?
Yeah.
From immediate shipment to after processing.
That's right. Sales recognition moves from when the concentrate ships to after it's processed and the refined metal is actually sold. It aligns with the integrated model. And looking further ahead in Indonesia, there's significant future growth planned, particularly the long-term development of the Kusing Liar deposit. That's projected to yield over 7 billion pounds of copper and 6 million ounces of gold between 2029 and 2041. Massive potential there.
Huge numbers.
Yeah. And they're also investing about $1 billion to transition to natural gas facilities, which will significantly cut their greenhouse gas emissions. This whole Grasberg scenario, including these slight forecast adjustments, it really illustrates the kind of precision and, frankly, the adaptability needed in these huge, complex mining operations.
Okay, let's pivot now. Shifting focus to a really key area, the U.S. copper market. And the recent tariff announcements, here's where it gets really interesting. What's the latest here?
Indeed. The U.S. government made a pretty significant announcement in July 2025, a 50% tariff on U.S. copper imports, expected to kick in August 1st, 2025.
50%. Wow.
Yeah. And it immediately impacted the market. U.S. COMEX prices surged. They reached about $1.25 per pound premium over the London Metal Exchange, the LME price. That's roughly 28% higher.
28% premium.
A substantial differential, absolutely.
Those certainly a significant financial upside for FCX then. We're talking potentially, approximate $1.7 billion annual financial upside on their U.S. copper sales just based on those premiums. But, I mean, with such a strong tariff impact, are there potential downsides? Long-term risks, maybe competitive shifts? What about FCX's own costs?
That's a really important point to balance. While that upside, that $1.7 billion potential, is significant, you have to look at the other side too. These tariffs could also potentially increase FCX's own costs, the cost of goods they purchase in the U.S., maybe by about 5% through suppliers passing those costs on.
Okay. So it's complex.
Definitely a complex interplay. Benefits, but also potential cost increases.
Nevertheless, FCX really is, as they say, America's copper champion. Providing about 70% of the refined copper produced right here in the U.S., they're a cornerstone of domestic supply, which feels particularly critical right now.
Definitely. And a critical aspect they're focused on here in the U.S. is something they call the leach opportunity. They see it as a major potential value driver. FCX has actually started large-scale field trials at its Morenci mine in the U.S. using internally developed leach additives.
Leach additives, so improving extraction from existing ores.
Exactly. And this isn't just a small efficiency gain. They're targeting an impressive 800 million pounds of copper per year from this initiative in the long term.
800 million pounds.
Yeah. With 300 million pounds expected just by the end of 2025, this kind of innovation, it's potentially disruptive. Because building new smelters like the one in Indonesia we just talked about, that can take a decade, huge capital.
Take 10 years for that one.
This leach approach offers a potentially much quicker and less capital-intensive path to boosting refined copper production. It sort of challenges the traditional ways new supply enters the market.
And they're not stopping there, are they?
Yeah.
FCX is actively advocating for copper to be formally recognized as a critical mineral. That would make it eligible for incentives like maybe a 10% production credit under the IRA, the Inflation Reduction Act.
Correct. And beyond that, they're exploring other pretty significant growth opportunities in the U.S. too. Things like potentially expanding the concentrator capacity at their Baghdad mine, that's estimated at a $3.5 billion project, could add 250 million pounds per year. And they're planning autonomous haul trucks to support that expansion.
Autonomous trucks too, okay.
Yeah. And they're also advancing studies for a big expansion in the Safford Lone Star District. So when you look at all this together, the tariffs, the domestic production focus, the leach innovation, it really makes you think about this complex interplay. Trade policy, domestic needs, technology, all shaping a really critical industry.
Okay, let's transition then to their actual financials. FCX's recent performance and their forward-looking outlook. They reported a strong Q2 2025, net income of $772 million, quarterly EBITDA $3.2 billion, operating cash flows $2.2 billion. What really stood out to me was their net unit cash production cost $1.13 per pound of copper. That seems like a significant improvement.
It is a very strong improvement. And their overall financial position is robust. They're sitting on $4.5 billion in cash. They have $9.3 billion in total debt, but excluding the debt specifically for the Indonesian smelter, their net debt is only $1.5 billion. Very manageable.
Right.
And this aligns directly with that financial policy we mentioned, returning 50% of excess cash flow to shareholders. In fact, they repurchased 2.9 million shares for $107 million just in the first half of 2025.
Okay, so they're executing on that policy. And looking ahead, their outlook seems quite positive too. Copper sales in the second half of 2025 are expected to be nearly 10% higher than the first half. That volume growth plus lower costs seems to set them up nicely for 2026-2027.
Yeah, that forward view looks strong, and it's backed by significant capital spending expected for 2025, around $4.9 billion. That includes major mining projects and, of course, finishing up that new Indonesia smelter. It really highlights their commitment to long-term growth. And it's not just the U.S. and Indonesia driving this. Their South America operations, like Cerro Verde, had a solid quarter. And El Abra, down there, has plans for heated raffinate injections and a major expansion. That expansion could add another 750 million pounds per year incrementally. They expect permit applications in early 2026.
750 million more.
Yeah. So this isn't just about FCX's confidence, though it shows plenty of that. It's also a powerful signal to the broader market. You know, despite all the global uncertainties we see, these massive multi-billion-dollar long-term bets, they highlight a fundamental belief, a belief that this copper supercycle isn't just a passing trend. It's more like a foundational shift that's going to underpin economic growth for decades to come.
So wrapping this up, what's the big picture takeaway from this deep dive? We've explored the undeniable surge in copper's strategic importance. We looked at FCX's pretty sophisticated global positioning assets across 3 key continents. We talked about significant milestones like their new Indonesian smelter coming online ahead of schedule, and this complex dynamic dance between U.S. tariffs and really innovative production methods like leaching.
Yeah, for me, what was maybe most impactful or surprising was the sheer scale of that leach initiative's potential in the U.S. 800 million pounds annually, potentially, with lower capital intensity than building new smelters from scratch. It really hints at a future where we might unlock vast reserves from existing sites in new ways.
Interesting.
And it's also, like we discussed with Grasberg Gold, a great reminder of the kind of precision and adaptability needed in this business. Even subtle timing-related adjustments matter. It just prompts us to always consider the nuance, in company updates and the broader market signals. Don't just take the headlines.
Right. Always look deeper. So here's a final thought for you, the listener, to mull over. Given copper's absolutely indispensable role in global electrification and this intricate interplay we've discussed, supply chains, trade policies, technological innovation, what long-term shifts might we see in global industrial landscapes? And maybe more personally, how will this impact the way you think about the resources that power our world?